Hey everybody, how are you? This is my first time recording, so uh hold on. I hope they got that. Okay. Let me make sure that I can hear. First, I wanted to talk about trading forex. And what is forex? It's where we exchange foreign currencies against one another. A lot of people get it mixed up with stock, but the difference is it's completely different. With the stock market, you can buy low and you only can profit like off of your buys if it goes up some and profit. With the forex market, it consists of buys and sales. The market, you can make money either way it fluctuates. Um, Keep in mind too that the market moves in waves, so it goes up, down, and to the side, which is consolidation. So again, you can make money both ways. That's the cool part about this. But today, I'm not going to do the basics today. I'm just going to go over a quick review of marking a chart up. So I got to find a pair that I want to get in. Go to trading view. You should have your trading view pulled up already. Go down. And I'm on the monthly time frame, just checking out the market to see what it's doing. You know what? Let me go to one that I don't have already marked up. I don't even like how those are. Okay, let me take everything off. Remove the drill. I'm gonna hide this. So basically, first we need to talk about the market structure. And basically, trading is really like 3 steps, maybe 4 if you add an extra. It's really it becomes a lifestyle. And I want this lifestyle for all of us. Okay, so let's go over the basic market structure. First of all, select a pair. A lot of people want to know what market structure is, and basically it's just the highs and the low in the market. Remember, it moves in waves up, down, and to the side. Up would be considered a buy, which would be your green candlesticks, and sometimes it's different colors depending on the setup on your chart. And the sales, which are red. Looking and finding the highs and lows in the market. So most key moves in waves. That's where the money at. Y'all make sure y'all write that down. Remember, note takers are money makers. It doesn't just shoot straight up. It has to have valleys in between. And what I mean by valleys, okay, let me see if I could take this off. I don't know if I can take this off again. Oh, I can. Okay, so let's say for instance, y'all bear with me because again, this is my first video, so I hope I do pretty good. I want y'all to leave here with a little bit more knowledge and become a better trader. You know what? I don't think I need that. Let me go to I think it's the line. Okay, so when I talk about higher highs and higher lows, let's say for instance, if I'm on the uptrend, right? The first word you should be seeing on the uptrend is high. Why? Because it's an uptrend. But like I said, the market is not just gonna shoot up, so it's gonna go up a little bit, come back a little bit, go up a little bit, well, go up a lot, come back a little bit, go up a lot, come back a little bit. And what I mean by that is, I told you it was the wrong one. That was the wrong one. Okay, let's try. Was it trend line? I can't remember, so I might mess up a little bit. Okay, let's try it. Uptrend. There we go. Up a lot, down a little. Up a lot, down a little. Oh, come on now. Down a little. Up a lot. Okay, so that would be considered an uptrend, right? Because right here, you went up a little, up a lot, down a little. Up a lot, down a little. Up a lot, and down a little. I hope that made sense. Now, again, on the uptrend, the first word that should come out your mouth should be high. And why I say that is because, let's see. I'm still learning these tools over here, y'all, so be patient with me. Oh, hold on. Okay. Okay, it's not gonna work for me. Forget it. Okay, so right here will be considered my higher low since I'm on the uptrend. Higher high, higher low, higher high, higher low, higher high. Did you understand that? Let me go over that again. Right here. Let me try to put. Okay. This will be considered what? Well, I'm gonna put it on an uptrend. On an uptrend. You should see high first. Why? Because you're in an uptrend, right? Okay. So now that we know that we're in an uptrend, we see that it starts with a higher low. So what's the next one? Higher high. What comes out the higher high? Right. A higher low. And so forth. Now, when these would be considered, let's see. Yeah, I want to remove that one. Hold on 1 second. Y'all see I'm having the hardest time over here. Hope I don't delete. Yeah, I done deleted the thing online. Okay, so let me just delete that. And let me just go back. Okay, let's go again. Higher high. I mean higher low. Going to higher high. Higher low. Higher high. Higher low. Higher high. And what comes next? Higher low. That's an uptrend. That's what the uptrend is going to look like. And when I say it's going to consist of valleys, these would be considered the valleys, the in-betweens right here, which also would be known as a pullback. If you want an uptrend, you don't trade pullbacks. You got some people, if you're a beginner trader, you kind of want to just stick to the trend, meaning if it's on an uptrend, you only want to get in buy positions. And how would you get into buy position is when it pulls back like this or go in between the valley. You should be waiting right here to get in. You know that you can get in right here. Okay. Same thing goes for a downtrend. In a downtrend, the first thing you should see is low first. Lower, low. Lower, high. Always add lower first. Oh, I don't even know how I'm going to draw these. Bear with me. Downtrend. Hey. Y'all, I'm having a moment over here. I feel so backwards over here because I can't really draw the downtrend. Okay, so in a downtrend, you should be seeing low first. Lower low, lower high. No, that's wrong. I'm sorry. Lower high, lower low. Lower high, lower low. Lower high, lower low. And that would be on a downtrend. You should see low first, meaning you would put low first in front of anything. Lower highs and lower lows. It's basically knowing where you are in the market. Being that we are in a downtrend, we should only be taking the lows because we see low first. Does that make sense? I hope y'all wrote that down, man, because that's I mean, whenever you go somewhere, you need to know where you are. And in the market, that's how you find out where you are, is knowing the swing highs and the swing lows, knowing if you're in an uptrend or if you're in a downtrend. Okay, so I'm gonna ask y'all one more time. If we're in a downtrend, what would you see first? Low or high? Low, right. You want to pay attention to where you are in the market at all times. If you're in a higher high or a higher low. If you're in a lower high, you should be expecting the lower low to happen. So if you really want to talk about entry, if you're in a if you're in a lower high, you know that a lower low is coming. So if you're already in the lower high, like this is where I'm at right now, then you might as well just wait on the sale. Wait on the drop. Because like on an uptrend, you're only breaking highs. The lower level only becomes a lower high when it breaks the previous high. When it breaks the previous high. And it's going to keep breaking. Keep breaking. On a downtrend, you're only breaking the lows. That's why you see low first also. Now, how does this relate to the charts? If you can find out where you are in the market, you should be able to kind of know what to expect next, because it's going to happen. Remember, you're either going to be in a higher low, expecting a higher high. If you're in a lower low, then you expect the lower high. I hope y'all got that. Oh my God. I hope y'all got that. I just gave you the basics right there of market structure. So now let's see if we can apply that to the chart real quick. So I'm gonna pull my pair back up. Let's see. I'm gonna go into GBP USD. Okay. And it's best to do this on a higher time frame, to where you can kind of know what it's doing on a high time frame, and then you zoom in a little bit lower. Most people mark their charts up on the 4 hours. I'm just really looking for like a clear entry for me. That's what I look for. Meaning like the candlesticks are gonna be clear for me. And the best way to do that is like doing it on a higher time frame. Like if you zoom in to a certain amount, like you should know. You should be able to see it clearly. I like this one, but I don't really know. Okay, let's go. Let's see what we are. I'm on a weekly time frame. The weekly time frame and the daily time frame kinda is the same thing. Okay, look at that drop. I think I like the way the weekly look better. Let me make sure I am still okay. So what I'm gonna do is I'm gonna go get my vertical line, and I'm gonna create me a floor and a ceiling, right? As of what the market is right now. Okay. The floor will always be support. Just think of it as you need something to support you, like how the ground supports us every day. You need your support. I'm looking for the periods of like right now. I see that it goes all the way back to 2017, but like right here, like I like how it looks up in here. And I will place my support and resistance right at the wicks, because that's where market was or had went. But we see that it was indecision also. Let's talk about these candlesticks real quick. No, let me stick to this. Okay, so then I'm gonna go and grab another horizontal line, and I'm gonna put it like right smack in the middle, because right now the only thing I'm doing right now is creating zone. I'm just creating zone. So I'm looking for some market action. I see that we had a lot of market action going on between here, and if you scroll back, you should be able to see again. Most people put theirs right where the wicks are. Let's go up a little bit. I think it gave me another line. It did. Okay, so I'm just gonna have to delete that one. I will put mine like right up in here. That's just me. And what you're doing is basically you're just setting zones. You setting zones. where price is or where price is headed. Let me delete one of these. I'm gonna have to set one down here also. Well, I will set one down here. So basically, again, I'm just looking for price action. I see a lot of wicks up in here. Right up in there. Now look at right here. I probably should move this one up a little bit. Let's move it up a little bit. Okay, so that's my middle zone. You see that? Knowing where we are in the market, and I'm going to show you exactly what that means. So apparently right here, I see that I'm on a downtrend, right? You see that downtrend right there? And those little grooves in between? Okay, so check it out right here. You start with, it's going in a downtrend. You see that? It's going in a downtrend. So in a downtrend, I see that I have, what should be the first word I should see first? Low, right? So I should have a lower high, lower high. You got a little bit consolidation. Those values I was telling you about. Lower low, lower high, lower low, lower high, lower low. See how you can tell where you are in the market? Lower high, lower low. You have some pullbacks. A lot of people don't trade pullbacks because a lot of people lose money in there. Lower high, lower low, lower high, lower low. So what should I be expecting next? A lower high, a lower high, which that probably would have been it right here, a lower high. So I should be looking for the drop, right? A lower low. And look at there. I see that that candlestick is green, but I also see that the sellers are, kind of pushing it down a little bit. So right there, I'm waiting for the drop. I'm waiting for the drop because I am in a downtrend. I hope you guys understood that. Like, this is all it is. On a downtrend, you just connect. Man, my lines are horrible. But you get the message, though. I hope. Like, they are horrible. Okay, but so we're on a downtrend. Knowing where you are in the market. So if we are in a downtrend on this trade right here, what should we be taking? What should we be looking for? We should only be looking for the sales. We should be looking for the drop. We looking for the drop. That's when you go down to a lower time frame and look for entry. Look for the drop. So let's see. I'm not going to really get into indicators today, but that's how you know where you are in the market. I probably need to just do this in another video. I don't want to take you guys too fast. Knowing where you are in the market structure. This is basic market structure. If you know where you are at all times, there's no reason that you should lose. You can't lose. And this works with the stock market also. It works with the stock market. Same structure. Never fails. So if you just now invest into stocks, come to TradingView, put your stock, your ticker up here at the top so you can find it. Find out where you are in the market on a higher time frame. That's it. Hope I helped somebody out today. Again, this is my first video. Be patient with me. I want to keep it short and simple because I know a lot of people get distracted and really don't, like sitting here just getting the message, waiting about 30, 35 minutes just to get the message. You know what I'm saying? I'm trying to break it down to you in the dumbest way possible. I say that as a good way. You know what I'm saying? Everybody learns differently, and I want you to just learn and get straight to the point. But thank you guys for tuning in. I decided to do it this way because doing some videos and stuff on Zoom is cool, whatever, but it's also good to have if you can go back and look at it. You know what I'm saying? Again, know where you are in the market. Before you leave out your house and get in your car, you have to know your destination, right? It's just like looking at a map. So look at your maps and know where you are and know where you're going. And the same concept applies to life. I see you guys later. I hope you guys have a good day. And I hope that you can take something from this video and apply it to your trading platform every day. Bye.